Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session and happy Wednesday. So we're seeing a little bit of moderation of this dollar selling that we've seen the last few days. Ooh, excuse me. I'm so sorry. I've got the Wednesday yawns. It seems like I yawn every day. It's like I wish I had more control over it. I just don't. Anyway. Hold on really fast. Give me 1 second. Okay. So really quick. So we had a little bit stronger durable goods orders come out, just a little while ago. The markets are fairly quiet. You're seeing a little bit of a move higher in the US dollar, Mexican peso, the euros, still struggling as we're up against resistance. And as I mentioned yesterday, if you were on the webinars yesterday, I gave you an explanation of what I'm trying to do with like the dollar Canadian, for example. All right. And this is the kind of important because I want you guys to understand a concept of trying to pre-position yourself in the market, position yourself in the market ahead of an event. So, I think I kind of gave my case fairly clear today on the F.A.C.E webinar that I'm expecting the Fed governor really not to, be as dovish as people think he's going to be. Like a lot of people feel that he's just going to be super dovish and blah, 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 blah. I don't feel that way. So I think, everybody's expectations like the last couple of weeks previous, I think he's going to maintain his tone. He's not going to say, we're going to start tapering today, but he'll maintain his tone enough to a point where, people go, okay, well, I think we're still going to see a taper in 2021. And then you're going to see the dollar probably strengthen as a result. So if that's the case, how do you position yourself in the market ahead of that situation? And that's why I was talking yesterday about taking the opportunity of being able to buy or get into some trades ahead of this Thursday, Friday, specifically Friday, because the Fed governor is speaking on Friday. And I used the example yesterday of the dollar Canadian. And so I'm going to give you guys if you missed it yesterday on the daily roundup, or you didn't listen to the recording, you just missed it. I'm going to reiterate what I said yesterday, just so you have an understanding of that. So taking into account what I just said, okay, I'm looking to position myself in the market ahead of Friday. So yesterday, I used an opportunity of seeing a dip in the dollar Canadian to be on the long side. Reason why is I thought we were pretty oversold. We're coming to previous resistance, current support, trend line support, all sorts of support down here. So I wanted to be long because I felt that between now and Friday, we were going to be somewhere here in the dollar Canadian, which we're trying to make our way up there, right? In the dollar Canadian. So if we can get, let's just say we can get here by tomorrow or Friday, we're, 126.50, 127, something like that. Then the Fed chair, says, hey, it doesn't say anything to really alter our view as far as, the Fed being, they're not dovish. They're just, maintaining their same view. So we're probably going to get a taper at the end of the year. And people go, shoot, I need to buy dollars again. The dollar Canadian maybe spikes back up towards 128 to 129, somewhere up in this neighborhood. Okay. But I already want to be in that position as that's happening. And I want to be adding, because if I'm long here and then on Friday we make a move that looks like this, I want to be in double the size as we're moving higher and being in a, free trade. Because right now, if I get myself into the trade, well, yesterday that I did, but I get into the trade and it's right here, then I can move my stop to my break-even point. And if I'm wrong, let's say the Fed chair comes out on Friday and is so dovish, we're like, oh my God, they're never gonna taper. Probably not even going to taper into 2023. I'm exaggerating, but let's just say, we come away feeling like that. Then the dollar Canadian is going to drop, and it's going to drop aggressively. And guess what? I'm going to get stopped out, but at least I get stopped out with a break even, right? I'm giving the trade the opportunity to really work in my favor, pre-positioning myself ahead of Friday. I don't know what's going to happen on Friday. I think I have an idea of what's going to happen on Friday. That doesn't mean that that's what's going to happen. Do you guys understand that concept? Do you guys understand what I'm trying to do here? We're going to do this again. Do you know when we're going to do it again? You guys take a guess. When do you think we're going to do this again? Once you guys get in that frame of mind. Gavin, you're right. Anybody else? Thanks, Hugo. But do you guys know when else we're going to do this? Raj, very good. Yeah, next week. We're going to do it for non-farm payroll. So non-farm payroll, we're going to sit back and go, okay, what do you think? What do you think the jobs data is going to do? It doesn't mean, you're right. I don't, I'm wrong, NFP, half the time. At least, maybe sometimes more. But, we prepare for these big events that might move the market, and you try to position yourself accordingly on what you think is going to happen. You don't have to be right or wrong. It's just giving your trade the opportunity to really, really be right. Okay. Let's get into the charts. So done with that topic. Let's get into the charts. Excuse me. And let me grab my coffee really quick. By the way, I cut my hair yesterday. Short. Not like short, not like, but it's short. Shorter than I've had it in a while. Feels good, really. You guys will see it in a couple hours. No worry. Okay. Let's go into the euro. So as the analysis from this morning, look, as long as we're above this resistance, really it's 117. I would say 117.60. We get above 117.60, then we're probably breaking this high, and we're going this direction. So I'm going to write down 117.60. Believe it or not, still feel that you have to have a bearish bias here. Alexander said, is it return to the Marine days? No, not quite, but not quite. But what I've realized is having shorter hair makes me look younger. And as I'm almost 50 years old, I kind of want to look younger now. When you're younger, you want to look older. But when you get older, you want to look younger. It's funny how that happens, right? Isn't that funny? Those of you guys that are older than myself are probably laughing because it's true. Gavin, Alex, like, I know it happened to me too. I mean, it's like, yeah, as you get older, you're like, dang, I don't want to look older. I want to look younger. I think what it was this weekend, I had all of my nephews over, or our nephews over, and they're all 21, 22, 25, 26. And all these young guys, young, strapping, they all go to the gym, muscular, got the girlfriends, they come over, and you're like, oh man, I remember when I was in my 20s. And then you look at yourself in the mirror and you're like, yeah, I need to cut my hair. Rick said, mirror, mirror on the wall, tell me I look younger. Keep telling yourself, Blaker. That's funny, Rick. Oh my God, I'm laughing my ass off. That's hilarious. Okay. All right. You guys think you're all comedians too. All right, let's get into the chart. Sorry. So support right now is 117.25. Below that, we'll target 117. 117 comes into view. Think about this as being a descending channel. So just resistance is at 117.60. Support's going to be 117. But we might find some support ahead of that. So 117, 117.25. Okay. Cable. So the sterling, be a little careful with it here. We've been marking up the last couple of days at this 38% retracement. Now, if you guys are bullish, this would worry me just a bit, because if you're bullish sterling, and by the way, I bought pound Aussie yesterday, so I'm definitely a little. I'm looking at this right now, going, All right, this is a 38% retracement, so we have to think that we might get an AB equals CD type of move here. If that's the case, then we're looking at a move towards 133 and change. And especially when I look at the Aussie, and I'm like, I have a hard time envisioning the Aussie breaking 70 cents. So because of that, I am a little bit, a little concerned about the sterling, that we can't get above this 38% retracement. So anyway, resistance is here, 137.50. Then after that is this 50% retracement, which is previous support, which is also this trend line. So that is at 137 right now, 137.90. So let's write down both of those. 137.50, 137.90. I'm not keeping it in bearish because we're not making lower lows, but I'm worried that this is developing like more of a wedge, like looking like this. Something like that. Anyway, support obviously is down here at 136, so that hasn't changed. Aussie. So, could we develop a little inverted head and shoulder pattern? Sure, we could, I guess. But you know what? While we're below this little dotted trend line here, I would not want to be on the long side. That comes in at 72.90. Frankly, this is what I would want to do. And I'm going to just say this out loud. What I'd want to happen here, if I don't have any Aussie exposure, and by meaning I'm not short the Aussie dollar, I don't want to short it because I'm already long the pound Aussie. So if I didn't have any, and the reason why I'm saying that is because I already have dollar longs against other things right now. So I don't want to just keep piling on dollar longs. You guys understand that there's a problem when you start to get over leveraged on one side, with even if it's in multiple currencies. So if I didn't have any dollar exposure, this is the way I would trade it. I'd like to see everybody get bullish right above here and then turn around and sell it. That's what I would like to do. Like, I'd like to sell it at 73 cents. Okay. But if we get below, probably, let me get rid of this really quick. We start getting below here. I don't know if that's going to happen. So that comes in around 72.20. That's a minor support, but just, You know, if it gets below there, people are going to just start chasing it lower. That's the problem. Kiwi. So back at range on the Kiwi, resistance. I mean, stupid RBNZ. You guys probably heard my rant yesterday. So irritated at the RBNZ. So stupid. Anyway, resistance is going to be right here. So 69.80. Support. I mean, dips back down here to this spike low. It's probably going to find buyers. You know, got some hourly lows down there. So that's going to be 68.80. I'm going to keep it in range. Dollar Canadian. Big support. I'm not marking up yesterday's lows. Although I think yesterday's lows are, you know, support. I actually am going to mark up this trend line here. So that comes in around 125. By the time we get there, 125.60. And I'm going to mark that as important. Okay. Believe it or not, it's going to stay in a bullish trend. Now you're like, well, what do you mean? You know, after that move lower, you're going to put in a bullish trend. Yeah, because we are making higher highs and higher lows. So I think the risk still is for higher prices. Now, will we get stopped up short of this high? Yeah, I do. I think if we squeeze up there, we will. 128, it's going to be some resistance. But we're not going to make it all the way up there. That's kind of silly to believe. I think initial resistance is right here. Well, I mean, that's pretty close. $127.10. I think that'll stop us up first, which will be right there. Right? Oops. Shoot. Sorry. Right about there. Let's assume that low is going to stick. So that's a 38% retracement, roughly. Sure is. Show is. This show is a little stanky right there. So 127.20 probably. Let's give it a little bit of Swissy. Oh, nothing's changed. All right. 91, 92. Okay. What? Nothing's changed in the Swissy? What? Say what? Dollar yen. Oh, well, I'm making way low, right? Anyway, US dollar Norway. This overshot a little further than I thought it was going to go, but it should be done now, hopefully. I'll write down in case it's not 870. That's key. 880 is support right now. Okay, sorry. Resistance should be up here. All right, here, let's I would assume that's about the 38% retracement, maybe in between. Yeah, so 38%. 98, 92. Okay. I still think it's bullish while we're above 870. You guys should know that. Looney, it's at highs. Really quick. Stand by. Okay. hold on. I just took off some of my dollar Canadian. That was plus 50, 80, 40, plus 52. I sold some of my dollar Canadian, just a little bit more, just taking some off because then I can be much more aggressive come Friday. I took it off at 40 at 126.40. You just hit the bid there. Okay, so let me continue on. Where am I at? What are we doing? Dollar Swiss, dollar Norway, dollar max. So dollar max, bull flag patterns playing. You guys know I already have a pattern in play there. So 2017? Dipped a little further than I thought it was going to go, but whatever. 2040 is resistance. Now I'm gonna put it in bullish, but we need to be, whoops, it's 2045. I'm sorry. We really need to close above this resistance today. So basically we need to close above. It's like 2027, somewhere around there. Okay. Okay. Continuing on. Dollar yen. So be careful with the dollar yen here. I know I updated it this morning, but we are at triangle resistance. We're basically there. I think what we were doing yesterday is we wrote 110, 109, 30, right? Let me make sure I got that correct. 110, 109, 40, sorry. So today, 109.45, 110, 110.20. Okay, I'm going to mark up both of those just because we're at 110 right now. If I was long, I would be very, very careful. The triangle, so that number is getting closer. Okay, sorry. Coffee. Dollar index. Yeah, we don't want to break below there. So that is really key support, 92.80. I was a little irritated at this because I'm like, man, that was such a stop run yesterday in the dollar index. Resistance today should be 93.30. I'm going to keep us in range right now. I'm going to keep us in range because of this false breakout as of right now, but that can obviously all change on Friday. But for now, we have to just kind of keep it in range. Hold on really quick. Give me 1 second. Okay. Steve, are you here? Steve. Scuba Steve.
Hey, mate.
Hey. Check your Skype message. Okay. Let me finish up here. So silver, same crap, right? 24. 23. Same stuff. But the good news is now it's now it's real, right? Now it's real. It's bearish while we're below 24. So that's the first time I think I put dollar signs in there. But why is it so real? Because now I know we've been writing down 24 forever, right? I think since we did this, we've written down 24 as being resistance, right? So now it's real. Why is it real? Because it is. I mean, we've been noting it for the last couple of days, but now you know it's really real. Like it's real, really, really real. It's really real. It's realsy. So we break above 24. That's reals. Gold. And what's really, if I was long silver, I'd be worried about this. Gold's had a really nice recovery and silver hasn't. That would concern me. Same analysis as yesterday. Descending trend line, previous triangle, resistance held. 1810. What did we write down yesterday? What did we write down yesterday? 1825. Why did I write that down yesterday? Oh, just in case, because I thought we might squeeze up here to the 618. Well, we didn't. So now that trend line becomes really important. So 110, 11810. Oh, no, God, I can't speak English, Blake. English. So hey, you're unmuted. 1770. Bitcoin. Where's the 15,300? I guess we should probably look, right? All right, screw it. We're going to look. It's like, do I really have to look at Bitcoin? Must I really? 20,000 or 50,500 support. Oh yeah, it's really here, but actually here. So 23 or 43.8. Okay. Still bullish. S&P still bullish. I mean, what do you do with that? We hit the 161% extension. Now what? Right? We finally got to 4,500. So now what? Now what do you do? So 45. $45.17. It's 127% extension. So let's just write that down. We are bullish. If we get a dip, first level of support is going to be right here, 44.55. Then beyond that would be right here, which would be 44.20. I just don't think we're going to see that today. Okay, there you go. Bias chart is finished. I'm going to take a picture of it. Steve, how are you?
I'm good, mate.
Hey, I just want to let you know really quick, and I meant to send you this a message about this earlier. I have an interview today. It should only be about 10 minutes long.
Okay.
Just about a little update on Jackson Hole. So just letting you know. Sorry, if you weren't on holiday, I would just, throw it at you. I just wanted you to know because I know you're on holiday and.
No, don't worry about it.
Okay. All right, cool. Just want to let you know that's coming. How are you doing today? How's the pictures of the beach look great, by the way.
Oh yeah, it's great. We spend a lot of time, and after I'm done with the webinars, I'm gonna be headed back there.
That's awesome. Well, I have to tell you, your view of the water has nothing on the rocks that I'm looking at and overgrown weeds because it's been raining here. So beautiful, beautiful. Anyway, good. I hope you enjoy your time. I know everybody appreciates you being here, spending the time with them, even though you're on holiday. So I'm going to let
My
you
pleasure.
I'm going to let you take over so you can be done with it. Thanks everybody. I'll see you in the chat rooms or in the daily roundup. So thanks everyone.
Okay, mate. Bye, mate.
Right. Thanks, guys.
Hey, everybody. I hope you're all having a nice day. Let me open chat box and everything else, and we're good to go. There we are. Okay. Good morning. Still in the swimming pool side, on the swimming pool side. We have swimming pool, jacuzzi, but nothing compares to the sea. So, we spend most of our time. The hotel has its own private beach, so we spend our time there. Okay, so what do we have since yesterday? Simple answer: nothing. Literally nothing major has happened since yesterday. There has been almost no movement. Makes sense why. The market is, waiting for Friday, and I'm assuming that unless something unexpected happens, we might see a couple of days of consolidating, probably not seeing any breakouts until that happens. I think we've gone past the point that somebody wants to take risk in the market ahead of events. I think the market is just going to wait. Liquidity is probably going to dry out, and this is the actually only possible danger for some kind of an unexpected move, meaning reduced liquidity. Other than that, I don't think we're going to see anything major happening. So where does that leave things? First of all, the DXY did hold this little ascending channels trend line support, which means that we haven't had a breakdown in the DXY. And, as I said, we might not during the next couple of days. Stocks remain extremely well bid, but they also seem to have temporarily stalled near the previous all-time highs, actually to new all-time highs, but not far away from the previous ones. In the case of the S&P, we're the 161.8% extension of this little pullback. Although, we could easily move this here to the recent micro pullback, and this way we can extrapolate next upside targets being at 45.17, which is the 127% extension, and 45.63 almost, which is the 161.8% extension. Of course, the most important element here is that as long as we remain within this big ascending channel, there is no reason to be bearish, technically speaking, right? There's no reason to be bearish. Now, for every event risk that is upcoming, there is definitely a higher probability that we're going to have, if we're going to have a surprise move, a surprise technical development, it's going to be to the downside rather than to the upside. Why? Because the market has already had an unbelievable rally. Because the market needs the central bankers to remain extremely dovish. That's what the market needs, and any type of surprise is unlikely to be for them to be, continuously more and more dovish, and the bigger chance of them turning somewhat more hawkish. Doesn't really need to be hawkish because this market, the market's expectations have become so extreme that we are talking about a possible tapering in $120 billion per month, with inflation running at around 6%, being some kind of a hawkish event, which of course it isn't. Monetary policies recklessly loose, and the only thing we're talking about is to perhaps shift monetary policy from recklessly, ridiculously dovish and loose to just extremely dovish and loose, right? But when the market has run so high, so far, so fast, because for the extent of the move, the 16 months is actually a short period of time. Yes, the risks are tilted to the downside. But until something like that happens, seeing a breakdown from there, you have to keep respecting the upside. Here's the Nasdaq as well. Nasdaq looking in the short term healthier than the S&P. We've broken through this rectangle. The upside target in this case is closer to 15,700. We're testing this trend line resistance in the RSI. If we break above it, we should see even more strength. But as I said, ahead of Friday, we might see the market just cool off and, not much happening. Now, I don't consider it a coincidence that precious metals also failed. There was nobody that wanted to take the risk to push and buy precious metals in breakout territory, right? That's why we saw gold getting rejected from this channel trend line resistance. I was telling you yesterday, if I remember right, that from a risk reward perspective, the short side of gold and silver look extremely appealing because gold was testing this confluence of multiple important resistances, all of them stockpiled between 1802 and 1811. So we're seeing a nice rejection from there. And in the case of silver, we had this $24 level. Above it, we would trigger some kind of a, not a good looking, but some kind of a double bottom. But we're finding resistance there. So also in the case of gold and silver, I doubt we're going to see breakouts ahead of any type of event risk. So, being where they are, risk reward remains a lot more appealing being short than being long without, having any idea what, we should expect on Friday. And even more, I have no idea what the market will think of what we're going to get on Friday, because it's nowadays we've gone to the point that even if they tell you in advance what's going to be said, unless it's something like very, very clear and clean, sometimes the mood of the market to interpret or misinterpret things might be based on a single word, on a single phrase that's slightly different than what we got a month ago or whatever. And I don't want to play this game. It's differences in what is considered looser or more hawkish or whatever have become so indistinguishable because the market has become so sensitive to it that sometimes I even think that even a comma can make the difference. So in any case, it is what it is. So bottom line, just by looking at everything from a risk reward perspective, looking at the DXY, looking at the Euro USD, looking at the precious metals, right? Somebody would claim that a dollar bullish reaction, which from what I'm understanding is what Blake is positioning himself for, looks like the more appealing outcome, just from a technical perspective, right? Now, on the other hand, you know me. I mean, I don't want to be long dollars because even if there is more upside in the dollar, which there might be, I mean, undoubtedly there might be. I still think that it's going to be within the context of a corrective rebound higher. So, I personally don't feel comfortable being long the dollar since, you know, whenever I get involved with the dollar again, I want to be being in positions that I will be able to hold for several days, even weeks. And, you know, I'll feel much more comfortable if they're in the direction of what I consider to be the trend, which is lower. In any case, crude oil also seems to be stalling after 2 super strong days to the upside. We still remain within this channel. I think it's most probably corrective and we're going to continue higher. I doubt we're going to see any type of a breakout within the week, though, for the aforementioned reasons. No changes in natural gas as well, so, you know, nothing much different here. No changes in platinum, remains within this corrective pullback within this channel. No big changes in the case of palladium. Palladium did stall just below the 2500 area, and if you remember, I mentioned it yesterday. I also mentioned it last week. In my opinion, 2500 is the area which is going to tell us if there is more to go to the downside in palladium, or perhaps we've already completed a corrective cycle lower with this little overthrow that we got below this channel. So yeah, you want to be short against 2500. It definitely makes sense from a risk reward perspective, and, you know, I really can't blame anybody for being there. Now, USD NOK, I just you know, revisiting, since I mentioned yesterday that, you know, this would obviously be one of my preferable US dollar shorts. Now it doesn't seem to really want to make the move ahead of you know, Friday, and I wouldn't be surprised if we don't see much happening. So yeah, it is what it is. I haven't done something with it yet because it hasn't really broken down yet. Now that's it. As I said, I didn't have much to say, simply because the market didn't give us anything new to talk about since yesterday. I'm going to be more than happy to go over any questions you might have before we wrap it up. Amira has already posted a question about UPST, which from what I see hasn't really changed since the last time we had a look at it. Very little price action here, which definitely doesn't help. But what we have so far in price action, showing a nice you know, ascending channel. We're getting closer to the channel's trend line resistance. We're clearly seeing some Rsi divergence playing out here. Previous high RSI was at 86. Current high RSI is almost 10 points lower at 76. This tells me that this market is running out of steam. I would definitely not be chasing it up here. I would be looking to be a buyer lower whenever we get a proper pullback, if that's what you're looking for. I mean, if you're looking to be long this, I don't think this is the place you should be doing it. I don't think you should be chasing this market up here. It seems somewhat fatigued. I think you should be buying lower and not chasing higher. Anything else? Any other questions, guys, gals, in FX or any other market? NVIDIA, another breakout to the upside. Not much of a big surprise, right? Pretty sure I had a lot more. Oh, it's NVIDIA that did. We deleted all the drawings because it's the one that did a split, right? If I remember right. So we lost all the drawings in essence due to the split. So nice breakout from this symmetrical triangle. Next upside target 227 to 161.8, and the 200%, the 200, which is in essence the 100% extension from the triangle's width, which is at 239 almost, right? Look at the nice RSI breakout as well. So keep looking higher for NVIDIA. 208 should be support from this point on. So probably more upside for the time being. There is absolutely nothing looking bearish on this chart. REGN. Okay, this broke out, accelerated to the upside. You know, whenever you see that kind of a breakout, you know, that immediately invalidated the possibility of this being part of a larger, you know, complex corrective move. By breaking through this ascending channel, the corrective scenario went out of the window, and then you know that you should be looking for this impulse to develop to a move to new highs, which we did now see. We also got this corrective range before that, as it seems we haven't had a look at this for quite some time. I'm assuming from the drawings. And now we were the last 3 days to all-time highs, and you definitely need to respect that. Now, having said that, is this the place that you should be chasing this market? No, probably not. But is this a market you should be looking to be long? Yes, probably this is a market you should be looking to be long after a pullback, right? Ideally, a pullback back to the top of this previous range would be nice for new highs following that, right? XLK. Now, probably we haven't had a look at this. Super bullish market, unquestionably, right? Super bullish. Just recently, we got another break to the upside, both in price and in momentum here, right? Having said all that, you know, should you be chasing this market ahead of the Fed? No, you shouldn't, because there is a chance that we're developing some kind of a wedge here, right? There you go. And, you know, RSI still stalling. I mean, we are attempting to break through this, but still stalling. Just this is an amazing move. I mean, like 16 months ago, we were at 60, what is it, 67, 68, and we're currently $100 higher, which is, we've moved 2.5 times. We've, you know, multiplied price by 2.5 times in 16 months. This is unbelievable. Yeah, so remains very bullish, but I wouldn't be chasing. For sure I wouldn't. My pleasure, Laura. Now, yen XXX, please. I'm assuming that means that you want us to have a general look at the yen pairs, and of course, I'll be more than happy to have a look at a few of them, starting obviously from the obvious, right? USD yen. Now, USD yen still consolidating within this descending channel. Looking at this, I would favor a break to the upside just by looking this in isolation. You know, so what's the channel, right? We're not far away from it. Currently passing from like 110.50, so we're like 35 pips away roughly from resistance. Now we break through that, I think we're going to see an extension towards 112.20 at the very least, which is that previous high over there. Now, having said all that, you know, as you see, you know, momentum is really lacking. We've spent quite a lot of time being in a descending channel, being in an ascending channel, being in a descending channel. In all cases, price action was never impulsive. So since, in essence, March, irrespective of which direction we've been moving towards, it's in a slow, grinding manner that doesn't show there is any short-term trend to follow, right? So keep that in mind. So basically, I'm not really enthusiastic about what I'm saying in the case of the USD yen. Now, if we want to talk about some yen pairs, I have to tell you that the vast majority of them had more proper corrective moves lower, didn't have this choppy environment I'm describing about in the USD yen, right? So look at Euro yen. Euro yen had a very healthy move higher since we found a low at the, in essence, end of the COVID sell-off in risk assets, more or less. They bottomed out a little bit earlier if we're talking about the yen pairs. They had a pretty healthy move to the upside, and the corrective move to the downside looks more reliable in the sense that it gives me more the idea that once we confirm it has found the bottom, we're more likely than not pushing to new highs. So, for example, euro yen looks like this. Now, was the bottom that low at the 50% fib at 127.80 something? I think it's too soon to know, but I would be pretty comfortable to say once we break through 130.50 that we have seen the low down there at 127.80 and we're on our way to new highs. So euro yen looks technically rather clean. Having to do with pound yen, it's the exact same deal, not a channel, but a rather healthy uptrend within this green channel you see here. Some kind of a corrective move that looks to be within an expanding triangle, a megaphone formation, if you wish to call it like that. As long as we trade above this bigger channel trend line support, currently passing from, what is it, 148.80. I think there is no reason for you to be bearish, and once we break through like 153, let's say, if you want to have confirmation, once we break through 153, I think this is on its way to new highs comfortably. So, in general, I maintain a bullish outlook for the vast majority of the yen pairs. Now, if we, for example, examine the Aussie yen or the Kiwi yen, you'll see a very similar situation. Aussie yen, quite a healthy uptrend. The move lower is well defined within a corrective channel, but still, as I said in the previous cases, for me to become bullish, I would want to see a break above the corrective channel. This is Aussie yen, this is Kiwi yen, a very similar situation. As you see, Kiwi yen looks even better than Aussie yen. All right, in this case, we would need a break above like 77.30. And also, let's have a look, let's say, at CAD yen, and we can wrap it up with that. Here is CAD yen. I mentioned it on Monday, the day before yesterday, if I remember right. I said that the fact that it held on a daily closing basis, this 85.30 area, I had also written that in the end of week analysis, is rather important because we are probably still within this flat bottom triangle, more or less. So above 85.30, you can remain bullish. And if we break through 88.40, 88.50, I think this is going to be a respectable move to the upside, a technical development that you should respect. And we will also be, in this case, on our way to new highs. Okay, let's see. I'll cover these questions and then I'm gonna wrap it up. And we have NTLA. Okay, we haven't had a look at that for quite some time. These are the scenarios we were talking about some time ago that played out. And then we talked about it again after it had broken out. And I said that this is a corrective move that's going to continue higher. And guess what? It's been playing out nicely so far. So this has twice played out exactly as expected. So I think you have no reason not to be bullish. Having said that, I'll tell you that I'm a little bit troubled by the fact that we haven't seen higher highs, which tells me that this huge move higher has probably created some kind of a larger consolidation, and we're going to need to spend a little bit of time here before finally breaking to the upside and resuming the uptrend, right? So the type of price action I see here tells me that probably we're not going to be moving yet to the upside, but we might take a little bit of time, and then we can talk about upside extensions. But in general remains very, very bullish, right? I think we might spend a little bit more time consolidating here, but that doesn't change the overall picture, which is bullish. Having said that, the next one is Kane. Looks very bullish, undoubtedly. Some Rsi divergences are worth noting, but this is generally a market that has probably bottomed and has probably a lot more upside left in the foreseeable future. That doesn't mean that we're going to be moving in a straight line. So bottom line, what I'm trying to say here is that I wouldn't be chasing this higher despite seeing the potential for more highs in the short term also. But in general, I would favor waiting for some type of a deeper corrective move sooner rather than later before committing to the alongside once again. Thank you, Lorraine. And last but not least, NTL. Oh, no, we had a look at it. Oh, you wrote it twice. Yeah, so we covered this. Okay, so thank you everybody for being here. I wish you a wonderful rest of the day, and I'll see you again tomorrow.